So I say that in a market, the basic economists will say that there's two aspects. There's supply and demand. Supply would be sellers' inventory, and demand would be buyers as measured, or one of the factors being interest rates. Let's take a look at those two. Interest rates last week inched up about 8%, closed the week at 7.16%. Now, while that's higher than it was a couple weeks ago, you can see it's in about the same range it's been for the last year, about 7%. So while it is higher a little bit, it's not enough to slow the market down in the long run. We should keep an eye on that and see if that's a trend and continues. But as of right now, it's not so significant that will cause us major problems. Now, the next factor would be on the seller side. What is the inventory? How many homes are available for sale? Because the challenge has been for a while that we just haven't had enough homes for buyers to choose from to increase the sales activity overall. And one of the great sources is Terradatum, and we look at their inventory numbers, we see that this year's inventory is about 15% higher than last year, maybe 12 or 13%. The inventory is starting to slow down a little bit this year. It's been an upward trend and seems to be headed down, while last year it was on a slight upward trend going forward. So it looks like we're in about the same range. You'll notice that the only years below this year in recorded history were the pandemic period years. This would be the lowest ever for a non-pandemic year. 18 was higher, 19 was higher, 20 was lower when the pandemic started, 21 was lower, 22 was lower, 23 was lower. So this is about a little higher than last year. So it might be the second lowest ever on record other than during pandemic years. That seems to be about where we're at. So overall, the inventory is relatively tight, and even if buyers decided to pull out of the market, there's not enough inventory to cause prices to go down. Now, we'll see this somewhat localized. In the LA market, Altos Research does a great job looking at the market, and they determine a seller ranking or a market ranking, and has been at 42 for a few months now. It's been the 40, 41, 42 range most consistently over time. And last month, it did beep up to 43%. Now, this is still on the seller's side of the market until we get down below 30. And you can see all the metrics are still pointing, for the most part, either in a positive direction for sellers or a stable market. So overall, in LA, the market's certainly not crashing right now. Certainly doesn't appear to be crashing anytime soon. Of course, things can always change pretty quickly. We'll keep our eyes on it.